Hello, and welcome to myfinanceteacher.org. Let's have a chat about Ethereum today. And I'm going to start with the weekly chart. This is Ethereum on Binance, a weekly chart going back to August 2017. What I want to note here is that at the moment, Ethereum has shown us 4 consecutive green candles on the weekly chart. And the longest series of consecutive green candles on the Ethereum chart is only 5, as you see from this chart. And just like in cycles, a rallying stage is replaced by a declining stage, here too, a series of green candles are replaced by a series of red candles. And I think over the last few weeks, Ethereum has actually rallied substantially enough to give us possibly a consolidation or maybe even cool down period. If you don't think this rally over the last few weeks has been substantial, remember this is a log chart. If you go back to the linear chart and zoom in a little bit, you'll see that Ethereum basically doubled in a couple of months. I think this is strong enough rally to warrant some sort of a consolidation. Although, again, on the longer term chart, the resistance zone above the ongoing price is pretty far. The next resistance zone would be based on these spring 2018 highs, just over $800 on Ethereum. So to be honest, it's also not unlikely for next week to give us another green candle. That would be 5 consecutive green candles on Ethereum, which has actually happened a couple of times over the last 3 years. And possibly that green candle will bring Ethereum to that resistance zone. So for that reason, I still want to keep my ongoing position in Ethereum, although possibly I want to bring the stop losses a little bit closer, as I think Ethereum is getting a little bit hot at the moment. We'll talk about the stop losses soon. Let's have a look at the daily chart, where we can see the cycles in Ethereum. Generally, over the last few years, the average length of a cycle was 57 days. The ongoing cycle is only 22 days old, so there is still a chance, as I said, of maybe another week or maybe even a couple of weeks of upward momentum in Ethereum. However, Ethereum is already overbought. 14-day RSI has been as high as 81 a couple of days ago. Ethereum has poked multiple times through relatively wide Bollinger Bands. And at yesterday's high, it stretched by over 43% above the 50-day moving average and by nearly 83% above the 200-day moving average. So some sort of a regression to the mean might actually happen. Whether it has already started with a couple of red candles we see today and yesterday, that remains to be seen, but at least some sort of caution is advised. Next, let's have a look at this market depth ratio for Ethereum. This is basically a ratio of how many buy orders are there on the range of exchanges versus sell orders. When there are more buy orders than sell orders, this indicator shows green, and that generally means more buying pressure, which would probably push the price upwards, and vice versa. When this indicator is red, there are more sell orders rather than buy orders, and which possibly would mean a selling pressure, which might likely push the prices down. Let's see how this market depth ratio correlates with the price. You see this gray line is the price on a linear scale, and underneath we have price as well on the log scale. Generally, I think the green spikes do come at the time of lows, and they are usually followed by a rally as buying pressure pushes the prices higher. Although sometimes these spikes do come a little bit too early, as this spike indicated by number 3 over here came a little bit too early before this nice buying opportunity at the low of March this year. If you look at the spike under number 5, that is some sort of a local low, a relatively nice buying opportunity on Ethereum. Similarly, number 7 came close to another small local low, a nice short-term buying opportunity, as well as number 9 came before that nice rally into 600 on Ethereum. Red spikes do come sort of close enough to local tops, although they also come a little bit too early. This red spike with number 2 came close enough to that top, a selling opportunity in Ethereum. A red spike with number 4 came close to a very modest, but still some sort of a selling opportunity in Ethereum, a modest top. Similarly with this unmarked red spike, it came at some sort of a very small local top. Number 6 over here came a little bit too early, and Ethereum continued to climb after that. Whereas this spike with number 8 probably came close enough to this top and a nice selling opportunity in Ethereum before it dropped from over 500 to under 400. And what we see now is a few days there was a big red spike, and after that price actually continued much higher from below 500 to over $600. But as we notice, sometimes these spikes come a bit too early. So was that an early spike marked with number 10? Possibly a few days after this spike, we might see some sort of a local top on Ethereum. And there is a chance that top actually occurred yesterday, as we see a couple of red candles at the moment. So amid so much excitement on cryptocurrencies, it's probably time to pause for a minute and think whether you want to jump into that excitement or whether you want to be a little bit cautious. Talking about the excitement, the fear and greed index over here in the middle is at 94 at the moment, so there is extreme greed. This is in general on cryptocurrencies, and that would partially relate to Ethereum as well. What does relate to Ethereum is this premium chart. This is the premiums on the net asset value of Grayscale fund as it trades at an ongoing price. We see that usually on the longer term view, the top part is a 1-year view of this premium. Usually a nice buying opportunity in Ethereum comes when this premium drops quite a lot. Somewhere below 20% is a really nice buying opportunity. And spikes in this premium is usually a time to be cautious or maybe even sell some of your Ethereum. The problem with this is that it's difficult to read this premium chart as volatility in this premium is huge. It varies anywhere from just 20% to around 900%. So although on the longer term scale, it looks like the current level of over 80% premiums is still quite modest and there is a potential to go much higher. If you zoom into the 3-month chart, a couple of months back, the Ethereum premiums were under 20% and they are currently over 91%. Oh, by the way, this difference between 80% on the yearly chart and 91% on the 3-month chart is because by the time I switched from a 1-year chart to the 3-month chart, the data was updated. So the actual premium is over 90%, which probably just adds to the level of caution you should exercise. So with all of that in mind, what I want to do is I want to raise my stop loss on Ethereum from the ongoing 520%, which is just below the recent close on the 22nd of November. I want to raise it to the very recent low that we see on the 4-hour chart. The low here, at least on Binance, is $581. Let's raise it to about $580, just below that low. And that will be my new stop loss in the fictitious portfolio, which I will update in just a couple of minutes. Before I do that though, let me wish you a wonderful day and good luck in your trades.